Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. If you love dividends like I do, you will definitely love today's video. I'm going to talk about one dividend growth company. They're growing the dividend really nicely, 15% basically in the last 5 years. They actually increased it 15% just this year. I'm going to talk about this company in terms of fundamentals, and if you're really interested in the business model and how they make money, then you can actually do a little bit more research. Okay, this is Intuit, and provides financial management and compliance products and services for consumers, small businesses, self-employed, and accounting professionals in the United States and all around the world. The company is currently trading $398 per share. It has an EPS of $6.56. It has a market cap of $112 billion and wide economic mode, which is quite good. Beta is quite high, just slightly higher than just the general market. When it comes to valuations, when you look at this, you think this company is very expensive, but when you look at the 5-year average, it has always been expensive. And when you compare it relative to the S&P 500, the technology sector, it's actually very expensive right now. In terms of price to free cash flow, it's actually not as bad as everything else. Forward PE though looks actually the lowest out of everything else. So we'll see. Will be interesting to see how the company does in the next 12 months. In terms of dividend yield, is 0.78. Like I said earlier, 15% increase in the last year, and then just latest increase, and the last 5 years they have increased to 15%. Normally, like I've always said to you guys, 6%, 7% and above is actually quite nice. But this one is actually increasing 15% in the last 5 years, which is quite nice. Annual payout of $3.12, and dividend growth streak was 10 years. So they have increased this dividend for the last 10 years, every single year. Payout ratio 24%, dividend safe to 98%, $3.81 billion of free cash flow, which is really good. Profit margin, we're looking at 12%, and operating margins, we're looking at about 18%, return on equity about 11%. Total return in the last 10 years, we're looking at about almost 11%, and current ratio is above 1, which is quite nice. So in terms of profitability, the company is doing really well, and it returned good money to the investors last 10 years. And that's probably why it's basically trading higher multiples, because people actually know how much the company has grew in the last 10 years, right? And then when you look at the next basically year, 16% growth, and then next 5 years, we're expecting about 15% growth every single year for going forward. And this is probably one of the major reasons why the stock is actually trading in higher multiples. Current price, we're looking about 398. And then when you look at the fair value for simply Wall Street, it's about 10% discounted right now. According to Morningstar, it's actually 21% discounted. According to TipRank, is actually 23% discounted, and according to Seeking Alpha, it's about basically 20%. So every single one of these companies have agreed is either 10% or to basically 20% or more discounted right now. This seems really a good company to basically add to a portfolio that's probably doesn't have a lot of technology companies, because you get the dividends and you get the growth at the same time. According to Seeking Alpha, it's a buy right now. In terms of Sharia compliance side of things, is absolutely beautiful. So 99.88% business side of things, we're looking for anything below 5%. Okay, interest bearing debt, we're looking about 6%, and then interest bearing securities 2.26%. So in terms of growth side of things, when we look at the annualized basically revenue growth, you can see every single year they actually grew their revenue, and 2023 is actually expected to grow from 12.7 to 14.12, and then the year after 15.76%, which is quite nice to see. The same thing goes for EPS, and then when you look at the dividends, okay, it looks absolutely beautiful. In the last 10 years, this is what they have been doing the last 10 years, which is quite nice for this type of business. In terms of share buying back and all of that stuff, look at this, share buybacks. So they have been basically buying back for a while, and then 2022 they have decided basically to actually issue more shares, which is quite disappointing, okay, because they have been buying for a bit, maybe because they don't have a lot of cash, because remember the cash that they've got in here is $3.8 billion. Maybe I don't know, for whatever reason, there's so many reasons why a company will actually sell more shares, or basically dilute your shares. Maybe they are acquiring another business, maybe they're paying off debt, whatever the reason. Actually, there is basically they're buying back their own shares. Okay, now when you look at in terms of the total sales, you're looking from 2013 to right now, it's actually grown massively from almost $4 to right now $13 per basically every single year from last 10 years. One other thing I want to show you about this company is this. Normally, Seeking Alpha authors basically don't somehow, for whatever reason, don't like the technology companies. They do like dividends, but they don't like technology companies. But when you look at this one here, okay, they actually rating it as a buy right now, 3.54, and it's like I showed you early when it comes to Morningstar, basically when it comes to the Wall Street analyst within this company, okay, is actually saying basically it's also a buy. And finally, one thing I want to say about this company is if you're interested in this company, just look at their latest earnings report. So the investor details that they've basically share on their website, it actually has a lot of details about the company and where it is and where it's heading and so on, which is quite nice to see. Like things like the stock performance in the last 12 years. The blue line on the top that's the company, that's the Nasdaq. And when you look at the S&P 500 return 12, basically 300%, the Nasdaq 450, but the company return 1400%. So that's the kind of thing they will share. Obviously, they will that's their selling point if you like, but you will learn a lot about the company by basically looking at their things like the total addressable market and so on, about the business and so on. So if you're really interested, this seems really a good company. I haven't spoken about this company ever, basically. I think I've spoken once or twice, but it seems a really good company. I mean, it kind of reminds me of where, although it's slightly older company, maybe it kind of reminds me of Qualcomm's and, Cisco's and so on. A dividend growth company that's into technology sector, that has a predictable kind of business. They've got good cash flow. Okay, they have a good free cash flow. I mean, and the dividend is actually absolutely safe. So if you're looking for a technology company, maybe that's one to look at. The portfolio is still the same. Nothing has changed. It's the same thing at the beginning of the week, last week that is. Okay, so 15th of January, it was for basically 64,500, and right now as we speak is just below 62,900 if you look at it. So I will be buying more of the companies that I own in my portfolio. I'm keeping an eye on ASML earnings report this week. I'm keeping an eye on Air Product and automatic data processing. I keep calling it Air Product and Chemicals because they're both ADP, APD, so it's slightly different. Also, I'll be buying more Cisco lately as well. I've been adding to it. I will be adding to Medtronics as well. What else have I been doing? Public storage I'll be doing a little bit, and then the UK companies, the usual couple of stocks here and there. But one that I'm definitely looking forward to the earnings, hopefully, is this one, S&P and Global. And I've got a video coming up next couple of days comparing this company to another company called MSCI. So those two companies we'll look in that video in the next couple of days. But yeah, so that's where basically we are right now in terms of portfolio. So I'll be doing more updates when the time comes towards the end of the month. I'm gonna stop the video there. I hope you enjoyed it. I hope you like finding value in this kind of thing that we're doing here. If you have, please like, subscribe to the channel. Let me know if you have any questions. We'll have a wonderful day. Assalamu Alaikum.